Hi everyone, welcome to the latest episode of the SPI Podcast. I'm Andrew Fox, one-time winner of Employee of the Month at Marex Solutions. And here is my co-host Tiago Fernandes, zero-time winner of Employee of the Month. We have a very important, very special guest today, Nilesh Jethwa, the CEO of Marex Solutions. Nilesh, first of all, how are you? How's everything going?
I'm great, thank you. Well, thank you very much for having me. I've been following this podcast avidly and excited to be part of it, so thank you very much.
Wonderful, really appreciate it. How are you doing, Tiago?
Yeah, I was given a mission by Andrew's colleagues because Andrew is part of Marex, so my goal will be to get him fired by the end of this podcast.
Yep. It may happen.
But I think we'll go and the one thing that me and Andrew agreed, we're going to be tough with Nilesh and Marex, just to try to figure out some things and be open and teach people about structured products and technology.
There are no bad questions.
No.
Oh, let's see. Yeah, I think a lot of the podcasts we've done so far have been on the very technical side of structured products. It's great to have somebody in from an issuer, the kind of the wider scale, the macro scale of it. I think it's a really big thing that a lot of people have been asking us for and don't have the same information about. So yeah, thank you for joining us so much. But without further ado, let's crack on. So structured products. You obviously have a great history in this. What kind of drew you into the SP world and the finance world in a larger sense?
Ever since I was 12 now. I think I've always spent a lot of time trying to understand what it is I would enjoy doing, and I've always tried to optimize for enjoyment and learning. And I think if you get those things right, the rest sort of falls into place. I mean, the opposite is you don't enjoy what you're doing, you don't learn, that doesn't feel compelling. So I remember at university thinking, look, I don't really like long-term assignments, coursework, anything that had like a 3 or 4 week deadline. I'd be like, so I know what will happen, I won't do anything, and then the night before you start cramming and working all night. And so exams are perfect for that. I'm not sure they're good at giving you good outcomes, but as a tool for passing a qualification, it's fine. So I like short-term, sort of maybe even higher pressure targets, and trading represents that. So the concept of trading is you sort of have an activity where you can put an effort in the morning and get an outcome in the afternoon. Mm-hmm. So you sort of get this quite quick feedback. But a lot of people could trade. Trading, the barrier to entry to trading is quite low, and I thought actually, given my enjoyment of mathematics and being sort of more quantitative than maybe other people, focusing on trading structured derivatives, which do require a bit more of a quantitative background, would allow me to trade, but also trade with less competition. Yeah. So that's how I sort of got drawn into this, and then I got started on this wild journey, this very narrow niche of finance.
Yeah. And you do have a very interesting story, right? Because you started at Lehman. Then you went to Leonteq, which is very innovative, right? And then from nowhere, you started Marex Solutions, right? For structured solutions, and that's very innovative. So if you go back to Lehman, how was that? And to be honest, I want you to also talk about, right? Because you were slightly different, not what people associate Lehman to, right? All the derivatives, let's say the asset derivatives that they were doing, right? Compared with the liability structures that we work with. So can you tell more about your times at Lehman, what you were doing, and exactly, Lehman, even on structured products, was quite big and quite popular, very innovative. Can you tell us more about those times?
Lehman was a phenomenal place to work, and I had the privilege to work with some really smart, driven people. And actually, going back to your previous question, it sort of ties into this. Why did I choose to go to Lehman? Well, remember when I started my career, you did a milk round, you speak to a bunch of banks, and the 2 banks that I was close to joining, one was Goldman Sachs and one was Lehman, and that was sort of my final 2. And the Goldman's at the time, and still is, a prestigious organisation with some really talented people, but they're a bit further ahead in their journey than Lehman. Lehman was sort of the scrappy, sort of younger brother trying to catch up, and Goldman's had a very structured graduate program. I remember it's 2 years and it's very official. You do this and that, and nothing happens until you finish that program. And Lehman were like, look, here's a desk, and can you code? Well, I can figure it out, and then off you go. And it sort of appealed to me. I felt like I backed myself to add value, and I thought Lehman would give me the most exposure in the quickest time frame, albeit at the expense of structure. And I've been living through chaos ever since. And so joined Lehman on the equity exotics trading desk, which was a nascent desk. It just kicked off. And their appetite to grow was, I remember 3 months into my career there, someone said there's a thing called fund derivatives. Like, go and figure it out and start trading. So we created a little spreadsheet, started faxing fund managers in my fax machine and buying and selling growth, Fidelity Equity European Growth Fund. And before you know it, we have a business. And it's like that. I was still literally wearing my nappies, and suddenly I've been asked to start a new entire business. And Lehman encouraged that. If you had an idea, if you're smart, if they felt you were competent, they would encourage you to try new things, to do new things. And it's an incredibly entrepreneurial environment. And in fact, if I reflect on what happened to the people who left Lehman afterwards, their careers have gone on to be quite successful afterwards. And I think there's something in the DNA of that operation and how we were able to build quite a successful investment bank until it wasn't, with very little at the beginning.
There's a lot of people, right? A lot of your colleagues are in very big jobs at all the different investment banks, right? Because you kind of had that learning at Lehman. How was it for you personally, especially when all things happen and you had the bankruptcy on the 2008, during the 2008 crisis?
That wasn't, clearly it was not a pleasant time for anyone involved. I actually left Lehman in February 2008, so a few months before it went bankrupt. But I had a lot of friends, I still have friends who were there at the last few days, and the uncertainty, right up to the last minute. And actually, people still believed in it right up until the day. I remember bumping into a colleague of mine on a Sunday evening. He was coming back from a golf trip to Scotland, and we were just talking about, that'll be fine, don't worry. And then the next morning, it's no longer there. And there's a shock to people, but I think in the end, the talent has sort of proven itself beyond Lehman itself.
Yeah, I think that's fair. I think what you were saying about the kind of the chaotic way, not in a good kind of channel chaotic way, I feel like you've done a good job of bringing that over to Marex as well. Your time
I've been chaos everywhere I go.
I mean,
that's my life.
Have you taken it in personally and output that in a new company? It must be difficult to be able to transfer your learning and push it that way.
I think the key to any successful environment, especially in a startup type environment, is making it really cheap to fail. You want to run as many different experiments as you can, because you just don't know which are going to work and which are not. And if you spend months discussing and thinking about it and running PowerPoints and committees, I just don't know if you get to a better answer, but you just make it very expensive to innovate. And so what can appear chaotic from the outside is actually just people running lots of small experiments all the time, and most of them will fail. But actually one of them won't, and that could be the one that drives you to big outcomes. So we joke about being chaotic, but actually it's a deliberate approach to almost bring the scientific method to business. If I can sort of have a hypothesis and test it really cheaply, I can then validate it and go for it, or I can eliminate it because it doesn't work. But I want to run as many of those as I possibly can. It's almost like the evolutionary process, but sped up.
Yeah, it makes total sense. I think you can see that in Marex. Obviously, it's not just a chaotic around everywhere. There is a channels for it. I think it's a great thing as a culture.
But I think that's very interesting, right? Because you have a lot of your colleagues at Lehman, right? They went to Goldman's, JP Morgan's, Morgan Stanley's, etc., and CT's, and you decided to go and join at Leonteq, right? It was more a fintech. Why did you make that decision? Why did you decide to join Ian and the team to Leonteq?
I look back at that decision and I think, what on earth was I thinking? Because at the time, this was before Lehman had crashed, so it was still the final throes of the big bull market, and so people throwing big money around for unnecessarily, and I sort of rejected that world to have basically a lower salary in a startup which hadn't made any money at this point, I had to put my own money into it, so negative cash flow.
Yeah.
I didn't have as much money as I would like to invest in it, so I actually borrowed against the one asset I had, my flat that I bought.
Yeah.
It was a modest flat, but it's what I had, and I borrowed against that. So I took a lower salary, put money in, and then borrowed against my asset. And if that went wrong,
you lose.
it would have been a pretty bad day. And this is in the throes of what was an emerging financial crisis.
Yeah.
So I look back at myself and think, like, that was
a big bet.
It was a punt. But actually, if I think I've been true to what I've always believed, which is focus on what creates the most learning and the most fun, and to have the opportunity to basically build a capital markets business, an investment banking capability from nothing, with a bunch of people who are, like I said, are friends and very talented from nothing. I mean, this doesn't happen it doesn't happen at all. I mean, the last sort of semi-version of that was maybe Credit Suisse financial products from the 90s, but this is now 15 years later. Like, there's nothing like it. I've got to give myself an opportunity, and I took it, and don't regret a single day I was there.
What was the vision? I mean, because they convinced you to go and join Leonteq right at the beginning.
Yeah, Jan Trok is an incredible salesperson, and I knew some people from Lehman, like Christoph. It was an easy sell actually. He made the effort to come to my house, and he sort of gave me the romancing. But actually, I was convinced before he even turned up. I mean, it's a project which I fundamentally lived through, because Lehman was, for all its qualities, it was very much meritocratic around revenue.
Yeah.
Revenue speaks, everything else doesn't count. And I felt like we weren't really getting the technology investment required for our structured products business. It was very much felt revenue first, technology second. And I thought with the right technology input, we could transform this. And so the thesis was really clear. If I can throw technology at a investment banking problem, we can take a lot of market share. And we did. That was, albeit the technology was cutting edge in 2008, we took rapid market share from banks because we provided better service, better transparency, things that people take for granted in the market today. We really pioneered back at the beginning, letting clients price their own products, automated sum sheets, things that Wall Street Dogs are famous for. There's things that we really got going, and that was just a bunch of people in our 20s just trying to work it out, and ended up being a multi-billion-dollar company.
No, it's incredible, because and you're too young, but me and Nilesh know the time where for pricing it was only calls, emails, fax. Everything was done on paper. I mean, doing the term sheet manually, right? Putting all the swap legs, every single coupon dates, everything manually. And Leonteq did the beginning of it, right? Completely automation, and ultimately trying to provide a better service. How do you find it? Because Leonteq was also a very sales-driven place. How do you find that balance between technology and sales?
I think Leonteq was sales-driven, and that allowed it to be successful. Right? I mean, it's not a given that you build a good product and people buy it. And to Jan's credit, he got us to market very quickly, and there's always a bit of you sell it first and figure out how to build it later, right? But I think ultimately, what I've discovered painfully over the years is this is a risk product as well. You're not just selling widgets to people; you're selling risk. What you're really doing is you're packaging potentially complex risk and delivering in a very simplified format to the end investor. The end investor knows exactly what they're getting, but to manufacture that isn't straightforward. And you've got to be focusing on your client and on selling, but you've also got to be focusing on risk and doing things in a way which is sustainable. I think that's probably been one of the biggest lessons in my career.
And then you mentioned, right, innovation and technology, right? Those two sometimes are very difficult to work together, right? How do you balance, you've seen throughout the years, right, the innovation on structured products, on derivatives, but of course, technology is always behind, trying to catch with the innovation. What do you think is more important, the innovation or the technology?
I think the different things. Technology is one tool to allow innovation to happen.
Mhm.
Innovation is, I'm going to provide something that's useful to my clients that wasn't available before. And you could deliver that through technology, you could deliver it through other means.
Mhm.
But it is true that technology is, it's rapidly evolved away from finance.
Yeah.
And I think finance has been slow to leverage it.
Mhm.
If I look at all of our competitors, I even look at ourselves, the rates of improvement in technology has not been mirrored by a rate of improvement to client outcomes.
No.
If you go back to the original Leonteq thesis, at that time we had sort of seen how booking a holiday had gone from, as you described, picking up the phone to the travel agent,
Yeah.
or going to visit them physically. I would like to go
Mhm.
and here's my brochure of my holiday to Spain, and then they'll call up the hotel, and maybe call up the aeroplane, and
Yeah.
maybe after a few iterations you get the holiday. Now you get on the phone at 11 in the evening on your in bed, and you can just
Book it.
book your own thing.
Yeah.
And finance didn't really get that for many years afterwards,
Yeah.
right? And I think there's parallels today. I think if you look at what's happening in sort of AI and in technology generally, finance is still living off a technology stack which is actually quite dated now. And I think the advantage of Marex and other sort of new players is that you start with a blank sheet of paper. You can really build things without the legacy. And the legacy is the cost.
Yeah.
So that innovation.
It's quite interesting, right? Because everyone is afraid how Google, Apple, Tesla can go to finance, right? But there is a barrier there, of course, which is regulation. How do you then make the difference between the innovation and all these fintech companies that are trying to go into finance, but then all the financial institutions which are regulated? How do you think that balance will work?
So regulation obviously increased a lot post the crisis, and I think understandably so. People got hurt. If customers lose money, if society has to bail out banks, there's a problem. And so regulation increased, and I think in a lot of respects it was a good thing. Arguably it went maybe too far in some respects, but it's there to help protect people, right, for society, customers. I think regulation per se is a bad thing. For new incumbents, so for new players to come in, of course they've got to get through that and understand that, and then it takes years of understanding what's required. I don't think it's navigating regulation effectively isn't something you can just pick up by speaking to a consultant, or you've got to live through it. You need to understand how you get to good customer outcomes. But I don't think that's the biggest barrier to entry. I think the biggest barrier to entry for a pure tech player coming in is understanding the finance piece. This is a fintech. Many of us have been on trading desks, and you sit there and you have bad days on the trading book, and that's how you learn. These are, you're packaging complex products and put them into a simple format for someone else. By digesting that complexity yourself, you have that complexity. And there is a human skill requirement. There's an experience element to this. If you haven't lived through that, I think that's very hard to automate away. I think that's going to be tricky for a tech firm to do, I think.
I think one thing about the lowering the barrier to entry, making it easier to get into the space, is you get the oversaturation on the side. If it is too easy to get into a space, then you're going to have the wrong people coming into that space to try and make money. How do you feel like the structured product industry as a whole can prevent itself from being oversaturated by tech lowering the barrier of entry to the market?
So I think tech has lowered the barrier to entry for some aspects of the value chain. So if you're a broker of a structured note that already exists, it's now easier to create a website or tools to facilitate client flow. So I think that will increase transparency for clients, and that's a good thing. I don't think that's a problem necessarily for the industry. As long as things are sold in the right way, there's always a bit of a risk there. But you hope regulators sort of are on top of that. I think where we haven't seen many new entrants is in issuance of derivatives, issuance of structured products. There's only been the investment banks plus Leonteq and plus Marex. There's no other non-bank issuers, and that sort of tells you something. This is not it's a relatively high margin business, and yet you've seen no players do it. And that tells you that it is actually hard to do. I do think it gets easier now. If you think about why structured products exist at all, they were started off in the 90s as a way for banks investment banks to fund themselves more cheaply in a high interest rate environment.
Yeah.
And the derivative is a way to kind of afford to raise cash more cheaply. It then became its own revenue line, and after QE came in, actually it was nothing to do with financing, it's much more about the derivative. Now you see interest rates normalised to some extent. I think what you'll see now is other institutions who would like to benefit from a lower cost of funding, a diversified source of cash, start entering the issuance side of the market, which is something we've never seen before. But I think with technology improving, it lowers the barrier to entry for other non-banks to start getting involved in issuing structured products, therefore giving them the cash to fuel their growth.
That's a very good point. I mean, I have been having those conversations for years and years, right? But no one actually did it. And I do remember back in 2017 when you started, I think we had a lunch with Richard Jory, remember him?
Of course,
yeah. And you mentioned, I'm sure if you remember my question to you, and I still remember, was like, that sounds great, right? There is need more competition. Non-banks should do it because it makes sense, right? It's funding for them.
Yeah.
It's better for investors, right? If I could get structured product issued by Tesla or Microsoft, I would love it, right? But you're not. Marex was a non-bank. It's still a non-bank. How did you were able to get through to your Marex clients that it was okay to buy a securitized product from a non-bank?
Marex is an organisation which, its history was really commodity brokerage and a bit of clearing, and its constraint was really the amount of cash it had available. It's I remember when I joined it, we'd just rolled a revolving credit facility for $125 million, and it was a multi-month effort, and I was very proud, rightly, that they managed to get the banks to get together to raise the cash to do this. But that was the only source of liquidity for Marex, apart from retained earnings, which clearly caps the growth potential of the business. And we looked at it and said, actually, look, we could raise a lot of cash very cheaply through structured notes. They're like, what do you mean? And they're not familiar with these products. So we could raise, I think we do 300 million in no time. They're like, forget it, no chance, zero chance. I remember the conversation. As of today, we have 4 billion of notes outstanding, of cash raised due to this, and it's unlocked a lot of value, I think, for Marex, because now suddenly all of the businesses which require liquidity can now grow in a way and they're unconstrained by liquidity. There are other constraints like capital, but they're probably the right constraints to have. But liquidity is no longer a constraint. It's also allowed us to be on the front foot from the acquisition side. We can now buy companies and grow them, and that's been a real feature of how Marex is growing as an organisation. So you've had sort of our organic growth plus the acquisition story for Marex, but it sort of started with having a major reason for that is having access to liquidity that we didn't have before. So I think we've proven that a non-bank issuer can benefit from this product, not just from the revenue it generates, but from the liquidity it allows other parts to grow with. Now, you're asking me sort of how did we at Marex convince investors to believe in us and to trust us? I think partly it's because we have a track record. This is the third time I've been part of building a structured products business completely from scratch. And there's other people in my team who came from other organisations like Leonteq or where we built this stuff from nowhere. I think the customers are concerned about credit, but they're also concerned about service and agility. And I think we've demonstrated one of the reasons we've grown so quickly is we've been able to provide services that banks can't offer, and agility that banks don't offer. And I think customers have responded to that. So there were for sure questions about our credit when we first started, but we've delivered. We pay people back. They're like, okay, we'll come back again. We're now investment grade rated. We weren't initially, but we are now. And people like that just affirmed what we said. Like we're good for it. And if you look at the growth in liquidity that comes from a structured product portfolio, it just sort of grows over time. I've seen that over 26 years now. It's sort of, It's a very diversified source of cash, even in crashes.
Yeah.
You have when the market's rallying, when equity market's rallying in particular, clients always tend to roll into callables.
Yeah.
When the market goes down, the duration of these products extends, and clients tend to be quite sticky to you. They don't sort of run for the door. So it's quite a powerful alternative source of liquidity for any organisation, and I think Marex is sort of benefiting from that.
So do you think there will be the non-banks entering this space?
Yeah, I'm convinced there will be. Look, Leonteq and Marex, the two places that have done this before, with the right expertise and the right technology, I don't see why someone else couldn't get to the same place. I think that's an inevitable outcome.
But you talked very relevant about funding and liquidity, which makes sense for the issue. But even for Marex, of course, is the derivatives, being able to hedge, right? It's not like Microsoft can do it or Tesla, as you pointed out before, right? You need to have the experience. And this is not something you can learn from ChatGPT. Maybe you can. I didn't try.
Well, look, this is a fintech, not a tech, right? There's a financial piece to this, and that's the expertise you're sort of hoping. That's what you're paying for, right?
Yeah.
It's not. We're not a payments company. This is a derivatives manufacturing company. Actually, if you think about the genesis of Marex Solutions within Marex, when I was at Leonteq, I was also responsible for treasury.
Yeah.
And the problem we face at Leonteq is we keep raising cash, and we don't know what to do with it.
Yeah.
We have no mortgage book, there's no offsite take, there's no retail business. What do we do with it? And that became a drag.
Yeah.
And so our funding spread was always a bit lower than it needed to be, because the funding spread is lower than you need to reward investors for the credit risk.
Yeah.
And we weren't rated at the time, but because we didn't need that cash.
Yeah.
And so that was always a tension point between sort of sales and treasury. So when I joined Marex Solutions, the thesis was to find a business first that needed cash.
Yeah.
And everyone in commodities has no cash.
Yeah.
Right? They've all spent their money,
yeah.
in their metals plants, in planting coffee seeds. They've used all their cash up. They're asset rich, cash poor.
Yeah.
And so if you have our OTC business in sort of for hedging solutions, we call it, which allows customers to hedge their market exposure to commodities, FX, and rates. We provide credit lines, and that uses cash up.
Yeah.
So we tried to deliberately find a cash-thirsty business first, because we knew we could raise a lot of cash from the note side. And at some point, Marex, wouldn't have enough demand for that cash. We needed to find our own demand.
Okay.
So I think the interesting the interesting feature of how we set this up is you've got sort of the demand for cash and the sort of source of cash in the same business, and that creates a lot of efficiency that you don't necessarily find at the bigger institutions, the big banks. We have a central treasury team who are making markets to each desk and then maybe making a bit of money on these transactions.
Yeah, sure. I think is that something that from day one of the Marex kind of life cycle you're looking to go towards, or is that something that, like you were saying, it kind of happened out of the blue and you ran with it? It was a good thing, you struck at the right time, went through, or did you plan from very early on? Or what were your plans from early on, in fact, if you were...
For Marex?
For the Marex Solutions kind of team, I guess, arm.
So the Marex Solutions thing was an accident, like many things in life.
Sure.
I just left Leonteq, and a part of I loved my time at Leonteq. It was a great experience. Learned some lessons for sure. But coming back to London to spend more time at home with the family, I remember once I was just tired, right? One Sunday morning, my wife was like, "Look, get out of bed. We're going to see this building site." And I'm like, my wife had actually been working with a children's hospice, a charity called Noah's Ark, and they just bought some land to build one of the first new children's hospices in years in London. So look, kind of stay in bed. I just want to get out of bed, taking the kids. We're going to go and see it. And actually, I got there, and by a complete coincidence, I bumped into Jeremy Isaacs, who I knew from Lehman days. He was the CEO for Lehman for Europe and Asia. Yeah. And we got talking, and he said, "Look, by the way, I'm about to become the chair of the trustees of Noah's Ark, this children's hospice. Would love to see if you consider becoming a trustee alongside me." and by the way, we bought this asset called Marex. Why didn't you come and talk to Ian and sort of pitch if there's something we can do together? And from that one random morning, I became a lovely experience being a trustee of Noah's Ark, and I learned a huge amount. That was a real privilege to be part of that journey. We really achieved a lot there. But I also got a chance to pitch this concept of Marex Solutions to the Marex board. And the rest is history. Yeah,
and they were obviously quite receptive to it. Otherwise, you wouldn't be a no. Yeah. We can actually jump straight into the hospice, kind of the story about that, if that's okay. Kind of get a bit ahead of ourselves. I didn't know this about you at all. Obviously, it's nothing that came up. But could you go more into depth about that and the kind of what it's done to you and what you've done back for it as well?
Yes, I mean it's Noah's Ark is an incredible organisation. They help children with life-limiting or life-threatening conditions, but also their families as well. And when I joined the charity, it pretty much been a charity that sort of served people in the community. So it had no premises. But if you were a family and your child, for a lot of these families, their children are really chronically ill, and they're just attending to their children 24 hours a day, every single day, and it's literally the day and the evenings, the nights. And so, clearly there's some specialist care required for the individual child. But if you imagine if you're the parent of that child as well, you get no respite. You're just tired. Forget about having a job. The considerations you don't have to think about if you are lucky to work as a trader in the city. These are people who are going through something very different in their life, and on top of that, they're the siblings often of the children who are concerned. Their needs don't often get met either. And so this organisation basically helps navigate sort of all aspects of that, not just for the individual child concerned, but the entire family around it. I thought they did some really impressive work, but the big opportunity was to actually build a physical premise. We call it the Ark, which is a physical building where children can come and enjoy their days and have their family involved. And you do a lot of stuff, sort of a lot of teaching, multi-sensory stuff. I mean, it's an incredible place. When you go there, you just feel the awe of it. It's just it's amazing. But the actual organisation itself, if I can say this, well, I had some really well-meaning, talented people. You can see how, as an organisation, it probably needed a lot of improvement. I remember the first meetings where you're going through the financials, and it's a spreadsheet, and they show the revenues and the costs, and literally the column didn't add up. I was like, I just can't. I couldn't cope with it. I was literally, and we sort of, I think, as a collective, as between the executive and the board, we sort of managed to really professionalise the charity and really bring it up a few levels. And it's we completely transformed its economics. We could now afford a building. We could put it on a revenue run rate, which is completely transformative to what it was before. And it just shows how if you apply the same kind of skills we've learned in a derivatives business, but you apply it to a children's hospice, actually there's a lot of parallels, and it was a real honour to be able to sort of help in a small way in that organisation and the children and the families too.
I think it's a very interesting topic, right? Because you look at the journalists, you look at the media, the regulators. There's always this critique that structured products or the banks are there just to take the money out from the investors, right? Well, although we all know that everyone needs to pay a fee, right? No one. There is no free lunches. And how important how do you think is derivative structured products compared with let's say with charity? I mean, there is something in terms of behavior, right, that you learn from finance that you apply into the charities, right? And that ultimately banks and manufacturers are not someone that is just there to take a fee and provide not really want to provide a service, right? I think it's I'm not sure what's your view on that.
We happen to be in an industry that's structured products, but in the end, in any business, you sort of make stuff and you sell stuff, and and a charity is a version of a business. There's no profit motive, but the same disciplines you need to build a business, I think, can be applied in other aspects of life, including it's very. hard to draw a straight line from an autocallable to a children's hospice. Right? we found a way to do that. But I do think the discipline you have from having to build a business from scratch, to be cost conscious, to care about people, culture, creating a shared vision, getting people motivated and excited to be part of that vision. I think these are completely transferable skills, and I don't want to comment on sort of people's perception of structure. Well, maybe we can. Structured products have, I think, a place in a portfolio. We can maybe get into that, but for me, the topic isn't that. It's, can you bring the skills you've learned in any business life and translate it to another sector, the third sector? I think absolutely you can. I think it's almost an obligation, or I'm lucky enough to be able to do that. That's 5 brilliant years working with some really good people and who are really receptive to the ideas we could bring. And if you go back to my original point, solve for where you can learn the most and have the most fun. And again, that was an experience where I did both.
I feel like if you have the drive and the capability to do something good for the world, you kind of have to, right? It's a moral obligation almost to bring that back and give something back to the world. So yeah, I mean, good for you for doing that. Really, it's impressive.
But on that point, I think the moral obligation point, that's something I take quite seriously, because a lot of people don't get a choice about the place they work at. On a world level, people will have to just work to survive day by day. And we're all of us in this country very privileged that we have a safety net, and within the city, generally speaking, education levels are very high. People have choices, and if you've got choices, I think it's an obligation to find a way to have fun in what you do and to enjoy it and to maximise it, because a lot of people don't get that choice. And if you're not doing the job you love doing, you're probably not having the biggest impact you can have. And that's probably a slight function of laziness. People don't spend the time to think about what it is that they really enjoy doing. Where can they really have the biggest impact? And if you make that effort, actually doing it is easier than thinking about what you need to do. I think that these people drift into careers and just are there by default. But how many of them would actually have chosen that deliberately on a Monday morning? I love what I do. I would choose to come to work. I do choose to come to work every day, but it's a choice. And we have that choice, all of us.
Correct. And I think we talked about it, right? It's about the value, the purpose that you do every day, right? Instead of just waking up just to make money. So let's talk about the future, because you've seen it. You've been in the industry further than the two of us. So what do you think is the future of structured products?
The future of structured products. I think there's a trend we've seen really going back 20-25 years, where structured products were really the domain of some very large banks selling products to very large institutions. We used to have clip sizes of $25-50 million in a trade. Then there's 10 million, then 5 million, 1 million, now 250k. But there's been a general trend that an increasing population of people can access a product that they couldn't before. And it's a valuable product. I defend the product because people with the deepest pockets are choosing to buy them. But now you're opening this up, democratizing the product to people who didn't have the option before. If you look at the growth in the US, for example, that's a market that didn't really adopt structured products seriously until 5 or 10 years ago. But it's gone crazy since then. People have realized actually this is a legitimate alternative way to generate a defined outcome in a very clean, transparent way, and also you can buy them in sort of increasingly smaller sizes. So there's a bigger population of people who are now learning about it. I think you sent me some data that sort of it's increased by 45% year on year or something. I don't know.
Completely. Look, the US market was $50 billion every year from 2009 to 2018, and it's quite interesting because when I started working with the US market, that was 2014, I went there and talked about Leonteq, like commerce bank platforms which were very very clean, and you could buy products for 1,000 euros, and I remember one person said, Tiago, stop. We will never go to 1,000 euros. Never. We sell $50 billion a year, and we are happy with that. And look at that now, right? It completely changed. And then it was a lot of the technology, right, that allowed that. But I think you're right. It was also the perception that this is a product that has some value, that of course has these risks, right? But in terms of on a portfolio, especially for wealth clients, with a certain age who need protection, it really works extremely well. And it's not only in the US, right? The US, Canada, Europe, you see in France growing, even in Asia, Taiwan, China, they're growing markets.
Yes, to answer your question in a sentence, I think we'll go to a $1 auto-callable, a $1 product, and probably be fully on chain. You know, I think this is going to be something which is going to be easy to access for anybody, and I think that's probably the sort of the next step for the industry. It doesn't feel realistic today, but I think we'll get there in less time than people believe.
Okay. Well, thank you, Nilesh. Appreciate you coming to our podcast and give us some knowledge. I hope you enjoyed it. It wasn't too difficult.
It was great. I was going to say, he's still here, so we'll discuss it later. But thank you, Raj. Really appreciate it, and I look forward to speaking again soon.